Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines. Asian markets have opened muted despite positive cues from Wall Street. Markets in Hong Kong and South Korea are shut today to celebrate the Buddha's birthday. Fortis Healthcare shareholders will meet today to decide the fate of independent director Brian Tempest. They will also appoint 3 others as independent directors on the board. The country's largest public sector lender is expected to report a loss for the second straight quarter when it comes out with earnings today. And it's not just SBI, there are a total of 5 nifty companies including IOC, HPCL, Cipla and Dr. Reddy's Laboratories also coming out with earnings today. Well, let's turn to the international markets now. And the Dow Jones Industrial Average climbed back above 25,000 points for the first time in 2 months on Monday, as the trade war truce between China and the US triggered a sharp rally in blue-chip stocks. Bloomberg's Abigail Doolittle wraps up all the Wall Street action in this report.
Stocks rallied on Monday with the 3 major averages all climbing by about 0.5% or more. The Dow outperformed, up about 1.2%. The S&P 500 climbed by 0.7%, and the tech-heavy Nasdaq rose by about 0.5%. Behind this move, from a macro perspective, were easing trade tensions, and on this, all 11 of the S&P 500 sectors climbed. Near the top, the industrial sector, boosted by GE, higher on an $11.1 billion deal with Wabtec, a rail deal. Also, United Technologies, Caterpillar, 3M, and many others climbed within that sector. Energy stocks rallied as well, boosted by oil, up more than 1.5%. And tech, that was another top sector, up about 0.9% on Apple, Facebook, Alphabet, and Microsoft, all climbing, among many others, including the chip stocks outperforming, up more than 1%. Underperforming on the session, though, were 2 of the Chinese internet stocks, NetEase and Baidu.com. Both dropped by about 5%, and the pain for NetEase was probably related to the company's recent first quarter miss, while Baidu.com fell on the resignation of the company's chief operating officer. Overall, though, Monday's Wall Street session was risk on, with stocks rising on the day. In New York, Abigail Doolittle, Bloomberg News.
All right, but the early rises in Asia, like we told you, in fact, the Korean market and the market in Hong Kong is shut today on account of the birthday of the Buddha. But the Nikkei is trading just about flat at the moment. It's failing to take those cues from the US markets, and the Australian benchmark is trading with cuts of as much as 0.7%. With that, let's turn to the Indian market, and Jayesh Khilani and Agam Vakil are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. Jayesh, first to you. Earnings on everybody's minds today.
That's right, Alex. Aside of earnings, it's not looking in line with what the global cues are indicating. So if you look at the SGX Nifty, that is indicating a near 20-point downtick for the Nifty and a start near the 10,525 mark. Now, this has in fact recovered from the day's low and has been quite volatile since the start of trade. So we'll have to wait and watch how the trade exactly pans out. But if you have a look at some of the areas that closed, we had a mixed close broadly for the areas. Now you had Vedanta, Tata Motors, HDFC Bank and Dr. Reddy's, which declined more than 1% each. On the other hand, you had stocks like ICICI Bank and Infosys, which managed to close positive for themselves, with Wipro also seeing a cut of more than 1%. Moving on to the commodity cues, oil prices currently trading with a positive bias to the tune of about 0.2 to 0.3%. Now remember that this is on the back of a 1% rally that we saw overnight. And if you look at the base metal space, we had a mixed close once again over there as well, with lead that advanced more than 3%, and that was the top gainer in trade. You had aluminum, copper and zinc, which also closed positive, while you had tin and copper on the COMEX exchange, which traded with negative bias. Now Shanghai Futures Exchange trading has in fact started, and once again we are getting mixed cues over there, but no major moves over here. So we have aluminum and steel, which is currently trading lower, and you have copper and zinc, which is currently trading with a positive bias. Gold, the same story continues. It has actually struggled to cross above the 1300 mark after it has broken and trading at the 2018 low point. Now if you look at the fund fund flows, the similar picture continues. However, yesterday, if you saw the DI number, that was close to 1,200 crores worth of buying. So that's a big number that we saw. And the FIs sold, on the other hand, 500 crores. For the month itself, FIs have now been sellers to the tune of 4,200 odd crores, while domestic institutions have pumped in more than 8,500 crores. As far as key indices are concerned, we had the Nifty, mid-cap and the small-cap index. All of them ended deep in the red. Nifty saw a 0.8% cut, while the mid-cap index saw a cut of about 1.7%, and the small-cap index declined 2.5%. As far as sector gainers are concerned, we had one of the key indices over there. So Nifty PSU Bank, that actually surged about 2.7%, and the Nifty IT also managed to eke out some gains for itself. Big losers as far as sector indices are concerned. So we had Nifty Realty, Pharma, and the auto index, which declined more than 2% each. And the VIX also, that actually surged about 1.8%. And this is the second straight day that we saw the India VIX rising for itself. As far as contribution is concerned, what led to the near 80-point fall on the Nifty was TCS, SBI and ICICI Bank, which closed positive, while we had the HDFC Twins, Kotak Mahindra Bank and Sun Pharma, which contributed to the losers. With that, Agam, what can we expect from the futures and options market?
Well, Jayesh, more weakness seeping in on account of a lot of these financial institutions from the private sector. We have seen unwinding in the Nifty by as much as 3%. Coming down to the Nifty Bank, as one might expect, given the fact that we've seen so much weakness, we are seeing about some share shorts building up. Coming down to the India Volatility Index, well, that again, we have seen an up move there, so it's inching back towards a mark of 14.5, and the Nifty put call ratio has fallen further, now below 1.3 in comparison to 1.36. In terms of changes in open interest, as one might expect, more unwinding in the 10,600 and 7,000 puts. I do remember the activity was around the 11,000 mark just last week, and that has come down, fallen now, and we're seeing more writing in the 10,600 call as well. Watch out for these levels as we move in today. And in terms of changes in open interest, well, we do have some stocks which are moving out of the ban, and that is likely to have some bearing on the way JP Associates moves. But other than that, a few other stocks that I'm watching out for. Well, Jubilant Foodworks, fresh longs building in, and among many other counters, we're also looking at Strides Shots and more weakness coming in. In fact, another 12% drop with another near 9% increase in open interest. So it's been a challenging time for Strides Shots, and can we expect to see the stock fall further? Let's wait and watch.
All right, thanks so much for that, Agam. Now, it's not just going to be a busy day if you are tracking the Nifty companies. There's 5 of them to look forward to. It's also going to be a busy day for Fortis shareholders, who will meet today to discuss a variety of things, including the finding of 3 new independent directors. Darshan Mehta is here to tell you all about those, and of course, the bids that have been offered for Fortis. Darshan.
So, Alex, this was called way back in early end April, and a lot has changed since then. A lot of companies have come out with new bids. The winner was selected. Post that, even new bids came in. 3 of the directors actually went in and resigned. So the point is, the EGM is today at 10 o'clock in New Delhi today, and it is called by 2 of the large funds that own Fortis. They close to own almost 12.04%. So Eastbridge Capital and Jupiter India Fund. So these are the 2 funds that have called in for this EGM today. Now, basically, what has happened ahead of the EGM is these 3 directors were part of the old Fortis board. They have resigned, and the EGM also called for their removal. So the last man standing right now is Brian Tempest. So there were 4 directors that Fortis board had, and all of them had voted in favor of the Hero Group. Now, these are the 3 directors that these 2 funds want to be part of the board, and the shareholders will decide whether they will come in or no. Now, what had happened was 5 out of the 8 had voted in favor of the Hero Burman combined offer, and 4 out of the 5 were the old directors. Now, the 3 new members that were there as part of the board were against the bid that was there. So this gives an indication that if new members come in, there could be likely that some other bid may also be selected for Fortis Healthcare. Now, basically, since this entire deal has happened, and since Fortis selects, old board of Fortis did select, the Hero Burman combine, Manipal has upped the offer post the deal that has come in. IHH has not upped the offer, but increased the date which the offer expires from 15th May to 29th May. So that is exactly what has happened. Now, in terms of what exactly these are what exactly the bids were. So what happened was Manipal increased the bid from 162 per share to 180 per share. The current winner is the Munjal Burman deal, which indicates that an 1800 crore initial investment will come in, and direct infusion, immediate infusion will be 1000 crore, and they're going in for a price and bid. Only thing that could probably go against IHH, which had a rather superior bid, was the fact that they wanted a due diligence, and probably that was something that the board did not agree. So this is the what's on offer for Fortis currently. Now, for SRL, what is there? The Munjal Burman has said that they would want to divest it. IHH has offered no comment, and Manipal has indicated that they will buy P stake and merge it later. So, that's what's happening as far as the SRL deal is concerned. Why did it work in favor of Munjals and Burman? And probably initially what happened, immediate fund infusion to ease liquidity that could pretty much come in, limited dilution of shareholding, that is what there is a change of management. They have a definite plan with respect to SRL in terms of divested, and change in promoters without any kind of disruption that will happen, and there is also a rights issue that the shareholders can participate. What could probably now go against them is the fact that what is working against them is that the IHH lost only asking for a due diligence. That's what Nomura has actually pointed out, and no prior experience in running a large chain of hospital that is there. And finally, large shareholders may oppose like the new directors. So why is this EGM very important, given the fact that the 4 people who voted for the Hero Burman group will be out, mostly 3 of them are already out, 1 may be out, and the new shareholders that have come in may actually go in with someone else. So there is a high chance that if this passes, the Hero Burman, that bid may be rejected, and some other persons, either Manipal or IHH, may actually come in to take control of Fortis.
All right, Darshan, and of course, we'll stay on top of this story over the course of the day. Thanks so much for that. Let's move on now and talk about earnings. Starting with State Bank of India, it's not expected to be a very good quarter for the largest lender, or rather India's largest lender, and that's likely to be on account of the bad loan problem that all the other banks are also contending with. Shraddha Babla is here to give you the broad brush numbers. Shraddha, what essentially NPA is going to be the problem?
Yes, Alex, like it was the case for all other banks as well this quarter. So I'm going to start off by saying that the year-on-year numbers will not be comparable when you see the SBI numbers come out, because the bank started reporting its numbers as a merged entity or combined entity basis along with its associate banks only from 1st of April. So we will not be doing year-on-year comparisons. But net interest income is seeing at about 19,225 crores for the quarter. Analysts are expecting the bank to report a net loss of 1,728 crores. That's the Bloomberg consensus number. So if this does happen, it will be a second consecutive quarter of net loss for the bank. Remember, in the third quarter, they had reported losses of about 2,400 crores, and this was the first time in at least 17 years that the bank actually reported a quarterly net loss. In fact, the variance for the net loss is quite huge. Estimates for loss range right from 485 crores to about 4,200 crores. So that's as far as the loss numbers are concerned. But what could lead to this kind of losses? Well, firstly, loan growth is expected to be slightly softer, a growth of about 4 or 5% on a sequential basis. Again, we are doing a sequential comparison. And this is despite it being a seasonally strong quarter. So a loan growth might remain a little softer, especially driven by the retail book, even as we don't expect to see much on the corporate book. Slippages are expected expected in the 19,000 to 25,000 crore range according to analyst estimates in the third quarter. Slippages, remember, had shot up to about 25,000 crores, and that was on account of the gross NPA divergence that the bank had reported for FY17 audit of the RBI, and gross NPAs, which stood at 10.3% at the end of 31st December, are expected to spike up to about 10.6 to 11.5%. So overall, all of these factors are likely to lead to that kind of muted growth that we are going to see in this quarter. What is going to be important to watch out for is going to be the slippages in the power sector. Remember, SBI, even in a conversation with Bloomberg Quint, had said that they are expecting some stress in the power sector loans. Secondly, we will have to see to what extent the bank utilizes the RBI dispensations on various provisions. In fact, with respect to the mark-to-market losses and provisions that they made for their treasury investments in the third quarter were huge. So they could choose to write back some of that, and that could cushion the asset quality to some extent. Of course, we will watch out for any sort of guidance with respect to the asset quality numbers for FY19. The management previously did say that they expect gross slippages to remain contained at about 2% in FY19. Let's see if they revise that. And lastly, any sort of comments with respect to RBI resolution, especially after we saw a 75-76% recovery rate as far as Bhushan Steel loans were concerned. So all of this is what we are going to be watching out for.
All right. Thanks so much for that, Shraddha. Now, a couple of oil retailers are going to be announcing their results today, and that's amidst the entire talk about the rising fuel prices across the country. Yatin Mota has this report on the key numbers that you have to watch out for with regard to HPCL and, of course, IOC.
As far as oil marketing majors are concerned, IOCL and HPCL will be reporting their numbers. So talking about the IOC preview first, we are expecting a revenue growth of 6% for the quarter. More importantly, this time we are looking at a dent in the profitability and GRM level. So the EBITDA is expected to shrink nearly 27%. Profits also seen down by 28% for IOC to a level of 5,710 crores. GRMs also seen at $8.2 per barrel versus a level of $12.3 per barrel on a year-on-year basis. Of course, this comes on the back of the fluctuation in crude prices that we have seen, and more importantly, the passing of higher fuel prices has not been that great in the fourth quarter, because of which there would be margin pressure for IOC. Similar is the case with HPCL. We are expecting a marginal 2.5% growth on the top line. Top line seen at close to 59,000 crores. Net profit seen 10% down for HPCL standalone entity at a level of 1,757 crores. EBITDA also is expected to fall by nearly 7%, and as I was mentioning earlier, the GRMs for most of the oil marketing companies are expected to be weak in the fourth quarter. GRMs for HPCL for the fourth quarter are seen at a level of $7.7 per barrel versus a level of $9.04 per barrel. So that is the kind of impact that we are looking at for HPCL. Of course, the forex related loss is something that would be weighing on the overall profitability for HPCL. And also, as far as the other factors to watch out for will be the refining throughput that is expected to grow 2 percentage points. As far as the sales are concerned, they are expected to be low by nearly 1.5% to a level of 9.3 million tons. That is the sales volume. And of course, digital discounts and GST will continue to weigh on downstream companies, and probably both IOC and HPCL should see weak earnings for the fourth quarter this time.
All right, pricing pressure and competition in the US markets is likely to push Dr. Reddy's to report a muted quarter. Darshan Mehta is here to tell you all about that. Darshan, over to you.
Yeah, so two nifty companies will come out with numbers today, Cipla and Dr. Reddy's. So basically, if you're looking at, let's start with Cipla first. What we've seen is that the revenues will be up almost 12% this time around, and that comes on the base of a weak quarter last time around. From a profit of a loss of almost 62 crores, and they had a lot of one-offs last time. We're seeing a profit of 438 crores. EBITDA, we are seeing at close to 830 crores. That will be up 64%. So EBITDA margins of close to 20.7%. 14% versus 14.1%. So last year was rather weak. Over the past few quarters, we've seen the margin trend improve significantly for Cipla. Now, basically, pricing pressure will continue for Cipla, but Cipla is saved a little bit given the fact that it does not have significant amount of exposure to the US market. It is more domestic markets and the South African markets. For India, it will be seasonally weak. Its fourth quarter is usually a seasonally weak quarter for them. US market will be aided by the Pulmicort sales that will come in the fourth quarter. They've also done some key launches that have actually helped the company going ahead in the US markets. Now for South Africa, basically the appreciation of the South African rand is something that will help Cipla as far as the South African business is concerned. But margins will again stay muted. R&D costs are expected to be much higher this time around. Now coming to Dr. Reddy's, it has a significant exposure to the US market. So pricing pressure will clearly impact them. Now on a top line, we are seeing just a 3% top line growth, profit growth of almost 14%. EBITDA will be seen up almost 4%, which means that close to 100 basis point improvement on the EBITDA margin. Competition has gone up significantly for the company. So even on a sequential basis, if you're looking at it, revenues will be impacted because of competition coming in. A couple of the key drugs in the US markets are facing significant amount of competition. The warning letters on 3 of their plants indicate that the new approvals are not coming in. So that is something that will also impact Dr. Reddy's. The other markets, the Russian market, CIS, as well as the emerging markets, they are expected to grow in on a lower base and currency coming in favor of them. Margins are expected to come in lower, coming to improve this time around because of an extremely low base that was there last time around. But overall, as we've seen the case with all the pharma companies that have reported numbers, don't expect any kind of blockbuster numbers from either.
All right, Darshan, thanks so much for wrapping up Cipla and Dr. Reddy's for us. Let's move on and talk about the stocks and news. Shraddha Babla has an entire list to tell you about. Shraddha, over to you.
Well, yes. So, Alex, first off, I'm going to start off with Tata Sons, where their subsidiary Panatone is looking to buy 4.7% stake in Tata Communications from Tata Power, and that will be at the price of 613 per share. So you will have money flowing into Tata Power, so watch out for that name. You have Infibeam, which will consider fundraising on 30th May. We could see some reaction of that development on in trade today. Also a couple of earnings companies which reported a very strong set of earnings. Navkar Corp is one where revenues grew by 16% and the net profit grew by a much stronger 33%. The EBITDA margins also jumped from 36% to 43%, so strong positive reaction likely there. You also have Action Construction Equipment Limited, where revenues have grown by 60%, but the net profit has grown up by 11 times. That is of course on a lower base. Margins on the other hand have expanded from 4% to 10.5%. Strong numbers from Motilal Oswal Financial Services as well. Revenue growth of 43% and net profit growth of 64%. Global Spirits has reported a revenue growth of 10%, but the net profit has taken a hit and is down to 1 crore versus 2 crores, and that's on account of a tax credit in the previous quarter. So adjusted for that, it would be a strong quarter. EBITDA margins have shown an improvement from 4.3% to 7.9%. On the other hand, we had a mixed set of numbers coming in from DLF, because while revenues fell by about 38%, the net profit jumped by 66%. That is on account of a profit from their joint venture coming in at about 205 crores this quarter, so that has helped. Future Retail is another one. We have a mixed set of numbers. Revenue growth of 2%, but a net loss of 464 crores for the quarter. Now remember, there was an exceptional loss of 604 in the current quarter, so adjusted for that, we would have seen a minor growth in the bottom line number. Margins have inched up slightly from 4% to 4.4%. They've also announced that they will acquire the retail business of Food World for 41 crores. And aside of that, you also have news in ET which says that Bharti Group firm Cedar is looking to exit Future Retail and that they're in talks with Premji Investment for that, so watch out for that name. And lastly, again, a Future Group company in focus. Now, this is Future Lifestyle Fashions. This is on the back of a bulk deal yesterday where Bennett Coleman and Company bought 1.8% stake and Spectacular Investments bought to 8.2% stake. So a lot of rejig happening as far as shareholding in the Future Group companies is concerned as well. Watch out for all those names.
All right, thanks for that, Shraddha. And turning to international news now, the US decision to impose fresh sanctions on Venezuela will have an impact on crude prices, according to the executive director of the IEA, that's Fatih Birol. Now, the US imposed restrictions on the buying of debt of the Venezuela government and the state-owned oil company there after incumbent President Nicolas Maduro emerged victorious in much criticized elections. Remember, Venezuela has the world's largest petroleum reserves, but it is facing severe economic crisis that is highlighted by hyperinflation and hunger. Speaking to Bloomberg, Birol said that the recent move by the US could send the output of Venezuela into a free fall.
We may well see a free fall of oil production from Venezuela, both in terms of the amount of oil and the quality of Venezuelan oil may well mean that it is one of the major risks for the oil markets in the next months to come.
And with prices of crude oil likely to go up, as Fatih Birol says, prices of petrol and diesel have also hit record levels after oil marketing companies have hiked prices to match the rising global crude oil prices. Now, there is a growing clamour for the government to provide some relief. In a chat with Bloomberg, when Kerala's Finance Minister Thomas Isaac said that he has called for the government to roll back the excise duty hikes that were undertaken when crude oil prices were lower. Listen in.
Before putting petroleum into GST, it's best that GST stabilizes. Then go. Now, for the time being, the best option would be for the center to roll back the tax. At least calibrate the tax downwards so that increase in the crude petroleum price do not result in an increase in the petrol and diesel prices. Because they were raising the excise duty. Not just excise duty, additional excise duty, so that the additional money they get is not shared with the states. They were increasing the excise duty so that the decline in the crude oil prices is not transferred to the consumers through lower prices. They were calibrating their excise rate upwards so as to mop up the entire benefit of falling crude oil prices. Now they can do the reverse and the prices will become stable. I do not know why they refuse to do that. Now, Karnataka election has just shown us for 3 weeks the price has been on rise. So don't put the blame on the market and the oil marketing companies. The public sector companies and government can order them to do. We have just seen it being done. Either it can go that way and allow the marketing companies to have a income and suffer losses which government can compensate, or they can calibrate their excess duty downwards so that the increase in the crude oil price does not get reflected in the petrol price.
All right, there's clearly lots to talk about over the course of the day. Oil prices, you have 5 nifty companies that are coming out. And there are also several stories on the website that you'll find if you log on. That's BloombergQuint.com. Make sure you check it out. First up, let's look at the stories. In its charge sheet in the PNB fraud case, the CBI has alleged that the former Managing Director and Chief Executive Officer of Punjab National Bank, Usha Ananthasubramanian, and some other senior bank officials were aware of the fraudulent dealings with diamond merchant Nirav Modi, but kept misleading the RBI. And speaking about banks and bad loans, the Finance Ministry is not seeking any relaxation from the RBI in its prompt corrective action framework and has instead asked banks to adopt a differentiated business strategy and to exit non-core businesses, according to an official. All right, that's all we have for you on Daybreak, but all you need to know is up next, so do stay tuned. This is Bloomberg Quint.